Hi, my name is Ronnie. I'm co-founder and CEO of GreenArc Capital. We are an impact credit fintech platform based out of Singapore that connects institutional debt capital to impact investment opportunities in South and Southeast Asia. The founding team is all ex-Credit Suisse with plenty of experience in emerging market credit and have executed $1 billion plus in impact products before setting up GreenArc. We are funded partly by the MAS FSTI program and a Silicon Valley-based VC. The problem space that we are looking at is twofold. One is the emerging market MSME financing gap, where MSMEs in emerging markets find it difficult to obtain affordable debt capital. It is also known as the missing middle problem. The second problem is the consumer lending gap, similar to the MSME problem. Consumers in emerging markets find it difficult to find affordable financing. Now, on the other side, we have institutional investors who, as we know, are increasingly interested in ESG or impact assets, as evidenced by the trillions of dollars invested in this space. Now, what has changed in the last 10 years or so is while the gap exists, there are a number of fintech lenders who have come in and brought down the cost of origination of these loans. Now, looking at the landscape, looking at it from bottom up, we have MSMEs and consumers who require hundreds to thousands of dollars in loans in emerging markets. Those are originated by what we call as the last mile fintech lenders. There are about 500 of them in the region, and we have looked at 70 of them and done a deep institutional credit diligence on 14 of these platforms. All the names over here are for illustration purposes. Now, the challenge with the current landscape, which is the bottom half of this page, is while the cost of origination has been brought down, most of these fintech platforms are equity financed by VCs. So the cost of capital is quite high. Now, what GreenArc does is we look at these loan books and aggregate these portfolios and gather both financial and impact metrics from these loan portfolios. And on the other side of our platform is accredited institutional investors who are interested in these impact assets. And through our platform, we provide the opportunity to invest in these assets, which otherwise they do not have access to. And they have the opportunity to create custom impact portfolios based on SDGs to which they are family offices or their institutions are aligned to.
Thank you. Time is over. Sorry.
All right, no problem. I'll take the rest of it in the Q&A.
Yeah.
Hello, I have a question. So through the platform, you can invest as an investor. You can invest into specific companies. So you're not. GreenArc isn't investing and securitizing those disparate investments into one asset. You can choose to invest in distinct underlying companies.
Yeah, yes, there are two options that we provide. One is you can create custom portfolios based on the loans that are available, or you can buy the loans directly from the platform.
Okay, thank you.
Hi, Ronnie. This is Eric from Singapore as well. Based on your MAS FSTI grant, do you require a license from MAS to conduct your platform business?
Yes, we do, and our CMS licensing is in progress.
Okay, and when did you apply that?
We applied it last month, so we should be getting it in the next 2 months or so. By the time COVID is done, we should be ready.
Okay, so it's a full CMS license that you guys are pursuing?
That's right.
Okay, all right, thank you.
Thank you. Next
Hi,
question.
Ronnie. Ronnie, can you tell us a little bit about your business model?
Yeah, hi, Celine. Yes, so being a two-sided platform, we collect revenues at both sides. There is a origination fee that we collect from the institutional investors, and as the platform matures, there will be a platform fee that we'll collect from the last mile lenders.
Thank you. Next one, please.
Thank you.
Yeah, Ronnie, this is Janet here. May I know how do your AI do the matching between the investor and the project based on parameter? And how do you control on the success part, you know, and the success fee that can go to you? Because I know many platforms, they go by subscription model, and it's very difficult to monitor based on success fee.
Sure, Janet. So we have an institutional partner who are also a partner in our FSTI application. So for institutional investors, unlike retail, the success fee is a little bit more straightforward because we onboard them one by one. So for us to monitor their transactions is very straightforward. Now, in terms of the AI itself, there are two components of it. One is which is our core IP. There's a risk engine and an impact engine. The risk engine is a all platforms talk about proprietary AI. Now, what we do, I would say, is what is standard in an institutional credit framework. It's a supervisory model that we have, which learns over time with the data that is provided by the lenders that we lend to. That is on the credit risk side. So based on that, our risk engine will be able to understand whether the models will be able to predict how good the efficacy of the more underlying platforms. That's on the risk side. On the impact side, that's more of a recommendation. The AI is more of a recommendation where based on the sort of activities that investors look at and similar profiles of investors, we can predict what asset classes or what products they could look at, and vice versa, where based on investors' preferences, we can guide the lenders to originate more assets of interest to investors.
How big is the data you have trial run?
Sorry, I didn't get that.
Because as far as I know, to implement an AI, you need a big data behind, right?
Yes.
To gather this
understood. So the data that we have a partnership with academic institutions. So we have 30 years of credit data that we are working with.
I see. Okay, thank you.
Ronnie, just two questions. What is your first 24 months of geographic penetration that you would like to achieve in terms of users and investors? And then second question is, does NPL play a part in terms of risk for you guys?
Yeah, so on the first question, our focus is on South and Southeast Asia. South is primarily India, and Southeast Asia are the markets that we've been focused on are Philippines, Indonesia, and Cambodia. Beyond 2 years, lots of things change. So ideally, this is scalable, but it needs to have a geographical presence, and we do have expertise and contacts in the region. That's why we are focused on this space. Now, on NPLs, there is a pilot that we had scheduled pre-COVID, but luck or otherwise, we did not proceed with it. So looking at the lenders and their books currently, we do see a lot of defaults coming. And we do see in the next couple of months or a quarter, we will have a good idea of where it stays, which also will provide a lot of opportunities in terms of better priced assets. So we do expect post-COVID, we will be in a good space to kick off.
Okay, thank you.